We know what it takes to keep our children safe and our schools open. And we have the tools to do it.
I'm pleased to say that we will not be going ahead with plans for vaccine passport.
Given that we have a new strategy, giving the public the information, it seems like a very worthwhile endeavor.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Monday, the 13th of September. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Tax climb down. House Democrats are aiming to raise corporate taxes to 26.5% in the U.S., short of President Biden's initial plan. China is looking to break up Ant Group's Alipay. That's according to reports, creating a separate app for its loan business. And the UK pulls its plan for vaccine passports, but readies as booster shot program to prepare for winter. Later on in the program, we speak to the WHO's COVID-19 envoy, David Nabarro. Now, first thing is first of all, happy Monday. We hope everyone had a great weekend. This is what the markets are telling us. So we're an hour and 10 minutes. Well, we're an hour actually into the trading session. This is what we're looking at overall. Let me start off with the European Stock 600 because it gives us a good indication of the risk mood out there. Now, we are seeing risks to a slower recovery. That's very clear to what we're seeing in China. We did have a sell-off in Chinese tech. You can see 2.4% for the HS Tech Index. Partly is because we don't understand, or investors don't really understand, the finality of the crackdown, as we seem every day to have a bit more pressure from Beijing. And then I'm looking at the U.S. 10-year yield. Of course, the big number, currently 13326. The big number is the U.S. CPI tomorrow. If you look at individual groups, so let's go straight to the European map. If we bring that up, it's very clear that the UK has a bit of a change compared to the rest. It's still gaining 0.5%. But the concern with the UK is, of course, what to do with commodity markets really having a quite tough time balancing strong demand with sticky supply. Then Germany gaining some 0.7%. We'll have a full roundup of the German election and what we saw in the debate yesterday with our Maria today. Utility, energy, construction, banks on the way up as we talk about the reflation trade. Now, our top story today, House Democrats are set to put forward a top U.S. corporate tax rate of 26.5%. Bloomberg understands that they'll also propose increasing the top capital gains tax rate to 25%, less than the hike proposed by President Biden. Now, this comes as we await an update on U.S. consumer prices tomorrow, sure to feed into the debate about whether or not inflation is temporary. So joining us with the very latest from Bloomberg News is our reporter Bruce Einhorn. Bruce, what can you tell us about taxes? So it's not quite what President Biden wanted, but it's more taxes than we have now.
That's right. So what we're looking at, according to this Democratic proposal, is raising the corporate tax rate to 26.5%. That's up from the current 21%. Raising the top capital gains tax rate to 25%. That's up from the current 20%. There would also be an increase in the individual income tax rate. The highest would go up to 39.6%, up from 37%. One last thing to mention, there would also be a 3% surtax on individual incomes above $5 million.
Bruce, overall, I mean, there's also going to be a lot of discussions about the debt ceiling. Does Washington kind of come into full swing, by the end of this week?
Yes, there's a whole lot that's going to be happening in the next couple of weeks. So we're looking at the Democrats taking action on this proposal sometime by the end of the month. As you mentioned, they also need to deal with the debt level there's also very little margin for error for the Democrats because they have such small majorities in both the House and the Senate. So it's going to be very tight getting through this proposal that House Ways and Means is looking at right now.
Bruce, if you look at some of the main pitfalls actually, and we heard about Mr. Manchin in the last couple of weeks, worrying about the infrastructure. Like, what is the main challenge of Joe Biden right now internally?
As you mentioned, we have in the Senate, there's Joe Manchin. Any one senator could scupper the whole deal because it's a 50-50 tie in the Senate. Kamala Harris would break the tie. So all the Democrats have to be on board. But it's not just problems in the Senate. There are also moderates in the House who want to slow things down. There are also progressives in the House who insist that if there is an action on some of these proposals, that they're not going to move ahead on the infrastructure bill. So a lot of competing interests that will have to be managed. That said, though, this is a process that everyone was expecting. There was going to be a lot of back and forth between the different factions in the party. So we shouldn't make too much of what we see at the moment. Anybody, putting their hand up and saying, "I'm going to stop this." A lot of that could just be leverage because everybody's looking to exert their power on the process.
Bruce, thank you so much. Bruce Einhorn there with the very latest on DC. Now, Epic Games has filed an appeal after a U.S. court rejected most of its antitrust lawsuit against Apple. Now, the judge did not accept Epic's claims that the iPhone maker is a monopoly, but she did say that Apple has engaged in some anti-competitive conduct and ordered them to allow all developers to use payment methods outside the App Store. Well, joining us now is Bloomberg's tech editor, Nate Langston. So, Nate, first of all, good morning. And what did the judge rule? And actually, was her decision in favor of Apple? Was it in favor of Epic? Or was it kind of, the middle ground?
Well, good morning. I mean, firstly, of all the charges, only one of them she sided against Apple. All the others she sided with Apple. So, for instance, Apple doesn't have to restore Fortnite, Epic's game that's central to this case, back to the App Store. It doesn't have to reduce the fees that it charges developers in its App Store. It doesn't have to allow for third-party app stores. The really significant one that Epic did win on, though, is the one that allows developers to directly point its customers or any customers of App Store apps to payment methods outside of Apple's store, which means that they wouldn't have to pay Apple's fee, which by default is 30% of all in-app transactions. So that is the one that is in favor of Epic, but it is also Epic that has said it's going to file this appeal. And we don't know what the appeal specifically will hang on, but the fact that 9 of the counts went against what Epic wanted, including the restoration of Fortnite and its developer account, it's very likely that that would at least factor into what it wants to argue in its appeal.
Yeah, so Nate, I mean, it seems that App Store fees are drawing, fire worldwide. What does this appeal actually mean in the next phase of the App Store?
Well, in terms of what's coming up, Apple has, as it stands right now, 3 months to allow developers to point a user to a different way to pay than Apple's Apple Pay, for instance. What that could look like is, hypothetically, in an app, there may be a button that says sign up here, and it would open a web browser, allow a user to sign up via a website, and then load into the App Store. Now, that could impact Apple's estimated $20 billion of App Store revenue, which is extremely profitable, and that's the key thing that Apple is going to want to address if it can.
Nate, thank you so much. Nate Langston there from Bloomberg Tech. Now, stay with Bloomberg Surveillance Early Edition. As the British government is readying a booster shot program, David Nabarro is asking the UK to reconsider. So later on in the program, we'll be speaking to the WHO's Covid-19 envoy. If you have any questions for him, just IB plus TV Go, or you can also tweet me at Lacqua. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is what we're watching this week. There's a lot going on. Today, OPEC released their monthly oil market report, which will highlight the major issues affecting the world's crude market. Norway, meanwhile, is heading to the polls. On Tuesday, we get U.S. CPI data. That's the big one for August. In the UK, we'll be watching the latest unemployment figures. On Wednesday, we have Eurozone industrial production numbers. And then at the end of the week, Russia holds parliamentary elections. Well, let's bring in Lucy Baldwin, Citi Global Head of Research and Equity Advisory, to talk about U.S. taxes, China's growth worries, and much more. Lucy, thank you so much for joining us. I mean, there's quite a lot going on. The markets are kind of trading sideways. Today, it's probably an inflation player waiting to see what the Fed taper timeline looks like. But if you look at China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
Good morning. No, absolutely. There's an awful lot going on at the moment, as you say. And clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. And so some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle, huge in terms of the global trade cycle, clearly slowing, you know, policy-juiced slowdown going on there. And you've obviously had, from a regulatory perspective, a lot of intervention, clearly again this morning, seeing activity there of that nature. So I think all of those things, yes, come together.
Yes, when you look at the commodity markets, and you know, this is one of the things that we spend quite a lot of time on. It seems that, you know, they're having a tough time balancing still strong demand with sticky supply. Is the commodity space maybe one of the most uncertain but exciting spaces?
Yes, you know, I think that's absolutely right. I think from a supply chain perspective, we think generally across the globe, most of the issues are relatively transitory. We tend to sort of side with the central banks from that perspective, albeit certainly within labour markets in the US, there's definitely some question marks there. I think when you look at commodities specifically, you know, China is obviously somewhere between 40 and 70% of demand for most of the major global commodities. So a slowdown in China is always going to have a fairly material impact there. So clearly something like iron ore, which is hugely dependent on their investment cycle, is going to be more impacted. So we'd be more cautious there. We actually see a little bit of downside, you know, oil somewhere in the middle, and then clearly a commodity like aluminium, which is going to be much more supply constraint governed, makes a big difference. And so we're much more constructive there. I mean, I guess just on mining generally, you know, that's a great example because you've seen a huge derating really in the stocks already. You've got much more supply discipline generally this cycle. Some of that's ESG driven. And that's definitely helping from a price perspective, and Lucy, be more stable this time.
When you look at China, I mean, is this a recalibration? I know it's a pretty hefty recalibration, but do authorities have it in hand, or could we actually see a policy mistake or a significant slowdown that then impacts the rest of the world? So could we see higher inflation in the US, not transitory, with a significant slowdown in China?
Yeah, I think, you know, we're expecting to see China moderate. You know, as we mentioned, we're seeing a slowdown induced by policy already in China, but we would expect that to in turn then trigger some easing down the road. I mean, when we're looking at the shape of growth from a China perspective, this year looks like around 8.7%, you know, in that 8 to 9% zone, which is obviously ahead of what the authorities there feel they need to target and to see. But next year, we'd expect that to slow to something more like 5.5%. GDP growth in China, which again is a little bit below that trend growth there, and obviously not helping the global picture as such. You know, again, you know, from a global perspective, clearly, again, you know, we've had a year where we've gone from, you know, obviously minus 4% last year. We're kind of probably in the plus 6% zone. We've just trimmed our forecast like others more recently globally for 21. And then as we look into next year, we've got about a plus 4% path. So, you know, again, still above trend growth globally, but absolutely you're seeing that impact from China and coming through to the global picture.
What does that actually mean for equities? Are we going to see, what would trigger a correction at this point in equities?
It's a really great question, Francine. You know, we're having a lot of debate at the moment with clients who are concerned about that picture. You know, as you say, that mounting evidence of slowing economic momentum, sticky, rising inflation, surprising to the upside, you know, and that risk, to your point, of a policy mistake, whether that's China, whether that's the US, where we start to see rates move too quickly. I mean, our core view we've had, as you may know, a 2% view on the US 10-year for some time. And for us in equity markets, that means that we want to be overweight financials, for example, globally, because we feel that that will obviously work well into a rising yield environment. I mean, in aggregate terms, we're obviously more cautious now than we have been. We've relatively recently downgraded, for example, our equity strategy chain. We've downgraded the US, having been overweight to being equal weight. You know, so again, you know, that's quite a big statement. So we would be buying on the dips, and we like certain sectors very selectively. And again, you know, within that global picture, which are tending to have a bit of a barbell approach, liking certain markets like the UK and Japan, relative to others.
Thank you so much for your time today. Lucy Baldwin, there, Global Head of Research and Equity Advisory. Now, coming up, Chinese regulators look to break up Ant Group's popular payment app, Alipay. We'll dig into that story shortly. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. England is to abandon plans for a vaccine passport. The system for entering venues, including nightclubs, was expected to come into place by the end of the month, following a similar scheme in Scotland. Israel, meanwhile, is preparing to ensure it has sufficient vaccine supplies in case a fourth round of COVID jabs is needed. It has so far given about 2.8 million people a third dose after starting a booster shot campaign back in August. Now, North Korea says it has successfully test-fired a new type of long-range cruise missile over the weekend. The state news agency says the missiles hit targets 1,500 kilometers from the launch site. Last week, North Korea staged its first military-style parade since Joe Biden did become the U.S. president. Business leaders say higher taxes risk strangling the UK's economic recovery. The head of the CBI, the country's biggest business group, will warn today that hiking taxes on companies is self-defeating as it inhibits investment. The criticism comes less than a week after Boris Johnson's government raised payroll taxes to help fund health spending. The UN nuclear watchdog has signaled progress in talks with officials in Iran over access to the country's expanding program. Tehran says IAEA inspectors will be able to replace damaged surveillance cameras and memory cards at atomic sites. But the pact to ensure surveillance data is not lost stops short of fully restoring the access for IAEA monitors granted under the 2015 nuclear accord. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now let's focus in on Alipay, where regulators are looking to break up Ant Group's popular payment app. According to the FT, Chinese regulators told Ant to go back to its roots of being a services payment provider. Well, joining us now from Hong Kong is Bloomberg's investing team leader, Lulu Chen. Lulu, this feels like a big deal. It feels maybe like one of the biggest deals in terms of the crackdown that we've seen on tech companies. So what's the latest information we have on the story?
Well, the latest that the FT are reporting is that they've told regulators are telling Ant to move its loan business onto a separate app. That said, it's not that surprising because regulators have already stated their intentions very clearly in April that they want the company to sever improper links between the payments business and its lending business. On the back end, Ant has already set up a separate entity to incorporate its credit business, and those operations are already in motion. I think the significance here is that investors have assigned a huge premium to Ant's valuation because they've been counting on the synergy between Alipay and its other financial businesses. And if the company were to spin off those businesses onto a separate app, then that synergy no longer exists, and hence valuations could come down even further.
So, Lulu, if this were to come true, what does it actually mean for other companies?
Sorry, I'm getting a signal interference. Can you repeat the question?
I don't know if you can hear me, Lulu. How big of a deal, if this is confirmed, how big of a deal and what are the ramifications of it?
Sorry,
Lulu,
I'm still not getting the question.
I think we're having a very 2021 moment where Lulu Chen unfortunately cannot hear me. But we will go back to, of course, this big story to look at the implications for Alibaba and financial and just in regulation in all. If you woke up this morning early in the morning UK time, you look at some of the Chinese tech stocks and you'd really be concerned about what exactly was going on there. If you look at the Chinese technology stocks, they buckled under Beijing's just regulatory clampdown, the latest clampdown. And there is, I guess, a feeling that maybe things are getting worse in terms of the clampdown, with investors not quite being sure about where this ends. Now, if you look at stocks, they're on the rise. If you look at futures, they're also rising. Now, this is ahead of that critical U.S. inflation data that traders will use tomorrow to assess expectations about the timing of stimulus withdrawal and interest rate hikes. Now, the dollar edging higher, Treasury yields little changed. We'll have plenty more, of course, on the virus as well, on the Delta variant. The UK ditches COVID passports. It's readying a booster shot program. Up next, we speak to the Special Envoy on COVID-19 for the World Health Organization. That's David Nabarro. If you have any questions for him, just IB plus TV Go. This is Bloomberg. Tax climb down. Well, House Democrats are aiming to raise corporate taxes to 26.5% in the U.S., short of President Biden's initial plan. China is looking to break up Ant Group's Alipay, according to reports, creating a separate app for its loan business. And the UK pulls its plan for vaccine passports, but readies a booster shot program to prepare for winter. Later on in the program, we speak to the WHO's COVID-19 envoy, David Nabarro. So good morning, everyone. Happy Monday. Yes, the two things are not mutually exclusive. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Monday, the 13th of September. So let's get straight to the markets with our Ritika Gupta. Ritika, all eyes on the CPI report tomorrow.
Yes, indeed, Francine. We seem to be gaining strength over here in Europe, and you're also seeing that buoyancy in S&P futures, up 0.5% there. This is despite the fact we've had a lot of Wall Street strategists coming out sounding the alarm of US equities in the past week or so, from Morgan Stanley to Goldman Sachs. But where we do see that risk-off sentiment creep in is in the dollar, sitting up at a 92 handle, getting a bit of strength here. And then I point to the 2-10s curve, so flattening to 111 basis points. This is, we have that CPI data coming out tomorrow. A lot of chatter about whether inflation is indeed transitory or not. They're expecting over 5% in that latest inflation figure. But really what they're saying is this flattening of the yield curve could suggest markets looking at it as transitory for now. And then WTI at $70 a barrel, supply not being able to meet some of that persistent demand, Francine.
Yeah, Ritika, we're also getting some big moves in metals.
Yeah, Francine, aluminum very much in focus today, rising to reaching $3,000 a ton in London for the first time in 13 years. So a big surge here for the metal. And this really, you can see on this chart here, doubling the prices from when we bottomed last year in May, about doubling now. And Goldman Sachs saying that it's in China and increasingly in the EU, it is that policy risk that is really likely to disrupt the supply of aluminum going forward. So you see the likes of AMG Advanced and Granger's here getting a boost off the back of that news. Norsk Hydro actually ticking lower now, though, Francine.
Ritika, thanks so much. Our reporter there, Ritika Gupta, on the markets. Now, the race between vaccinations and new variant strains won't end until COVID-19 has touched almost everyone. That's a takeaway from today's Bloomberg's Big Take. Now, according to experts, eliminating the virus won't happen in the next 3 to 6 months. Further outbreaks, closed schools, and working from home could well become the norm again. Well, joining us now is Sam Fazeli from Bloomberg Intelligence, who, of course, looks at the virus very closely. Sam, thank you. And it's so nice to see you in person.
You too.
I mean, what do you mean the virus is not over? We can have a chat like this.
I flew in an airplane and got here.
But things could change. Yeah,
I mean, again, if you look at Michel Cortez's piece, which was the piece that you're referring to, very, very nice piece, a lot of it is all about infections. It doesn't really dig too much into the, and that wasn't the point of the article, the risk of severe illness, hospitalizations, disease. So that's obviously something that is the critical element of what vaccines are for. But of course, we are seeing what they call breakthrough infections, which is not the B word is not one we want to use too often. Vaccines were never meant to be sterilizing.
So what does it mean for, first of all, for further lockdown? So the piece argues that we're all either going to be vaccinated or get it because of the way it spreads. I don't think it looked at possible mutations. So what's at the forefront? We're getting into the winter season. What's at the forefront of your mind?
Yeah, I think what I want to know is the next key piece of data I want to see when I wake up every morning waiting for a paper published is Israel's data on infections in vaccinated people and disease in vaccinated people. I want to see if they're seeing a waning of protection against severe disease. If I see that, we go back to the point that I've been making all along. This is a 3-shot vaccine, not a 2-shot vaccine.
Interesting that you want to see it in the real world, right? So you want to see it in Israel because maybe some of the trials were off?
Well, no, the trials were done with a 2-dose vaccine. The readout was after 2 or 3 or 4 months or 5 months or 6 months, and it was just looking at infections. And now we're dealing with Delta, we're dealing with a group of people living their lives, very different in trial setting. That's why it's important.
Okay, Sam, keep it right there because this is without a doubt the interview I've been looking forward to all day as England is readying the booster shot program. The WHO's David Nabarro also pleads with Western governments to hold off until the world's population is vaccinated. Well, joining Sam and me now is David Nabarro. He's Special Envoy of the WHO Health Organization Director General on COVID-19. So, Mr. Nabarro, Dr. Nabarro, thank you for joining us. You have been pleading with countries such as Ireland, possibly the UK now, that actually we should not get booster shots. Why?
Hello, Francine, and hello, Sam. I look at this pandemic from the perspective of the world, not from the perspective of a specific country, not from the perspective of specific communities. This world is struggling with a dangerous virus that is constantly evolving, and new variants are emerging, and there will be more. Also, I think this virus is most definitely here to stay for the foreseeable future. So how do societies continue functioning and functioning well despite the presence of this dangerous adversary? Answer, we use every single response that we have in our toolbox. Vaccines are vital, particularly for preventing death of people infected. There are many issues that are not known about the current vaccines that are available. Vaccines are incredibly short supply. And so thirdly and lastly, that means you've got to deal with this as a global phenomenon, and if possible, try not to let national priorities somehow be prioritized over the global need. And that means don't do boosters now.
So do you think that we haven't gotten, through the worst of the pandemic? And is there a danger that if not enough emerging markets are vaccinated and we get booster shots in the Western world, that because of these two things coming together, we could create new, more dangerous variants?
I do believe that is likely. Let me explain. If the rich countries take booster shots and indeed start to introduce regular booster shots that are adapted to the currently circulating viruses, they will use up all the manufacturing capacity, and there will be no vaccines available or minimal vaccines for the rest of the world. And this is not a tenable way to deal with a global problem. So I'm just saying, hold back on your booster program till we've got a plan for immunizing the whole world. Whilst there is virus circulating in the unvaccinated world, there are huge risks of variants emerging that will eventually be able to beat the vaccines that we're using in the UK, in the US, and in Europe. So we're in a very unstable situation. Please let's slow down, look at the world as a whole, and develop a response plan for the whole world and do it properly.
David, I have a question for Sam, and I think then Sam has a question for you. But this goes back, Sam, to what you wanted to know from Israel, right? Is actually, if you just look at a population, and what David Nabarro says is absolutely correct for the whole world. But if you're in charge of your population, you actually don't know if you get 2 shots, how effective that is, if people will end up in hospital after 7-8 months because the 2 shots are waning.
Yeah, I mean, Dr. Nabarro, thank you very much for your comments and obviously joining us. So one of my concerns is that if we do eventually start seeing a waning of protection against severe disease in people who have had 2 doses, whether that will change the equation as regards do we use third shots in the rich arms versus first shots in the developing nations. And that's the one question that I don't have an answer to, because until now, protection against severe disease has maintained at a high level.
Right. Mr. Nabarro?
Yeah, and you're so right, Sam. I think Sam's right. Actually, I heard your comment in the earlier interview, and I thought this is the really serious question. How long does protection remain in an individual after they've been immunized? And are people similar, or do some people lose protection quickly whilst other people maintain protection for several years? And the fact that we can't answer these questions is because it's a new virus and these are new vaccines. But you're so right, the Israel data are going to be hugely important. Well said, Sam.
I mean, Dr. Nabarro, is there at the moment, right? I know it's anecdotal evidence, but it seems that people that have been sick with the virus and then got 2 shots are better protected than the ones that, that only have 2 shots. Like, and this is something that Sam and I were talking about, what's the metric for you to say, right, a country has gotten out of the virus? How do you measure success?
Yeah, and I'm not going to be able to give you a firm answer with numbers. Again, it's not known. Here is the sort of thing that people are considering. They're saying if a large proportion of people in our country have got functioning defenses against the virus, then we can start to release other means of control and just rely on vaccination as our basic strategy. This is, in a way, what Britain and Israel are both trying to do. Now, the challenge all the time is going to be to work out what is the right combination of inputs to be protected. And as you're saying, there is some data to suggest that if you've been infected with COVID and been immunized, that gives you super protection versus just being immunized. I wish I could be more precise, but I can't. And the fact that I'm not able to be more precise means that we get these very difficult discussions going on at the moment about what is the right way to protect your population.
One final question, David, that, Sam and I were also discussing that there's a variant of interest, mu variant. What do we know about it so far? I mean, are vaccines actually effective in countering that?
Gosh, again, we don't have the precise information because, quite honestly, you don't know how effective vaccines are at giving you defenses against a particular variant until a lot of people have been exposed to the variant. If you try to do it in a laboratory, trying to look at different things inside people's blood and do they deal with the variant, that only gives you, frankly, an incomplete understanding of the situation because the way in which people protect themselves against viruses is quite complex. So we will know the answer to the question when more and more people have been challenged with the mu variant. But in general terms, can I just say, given that we're about to end, I am of the view that variants that can beat the protection offered by vaccines are bound to emerge all over the world in the coming months and years. That's the nature of viruses, and it's a particular characteristic of this virus. It seems to be quite stable, and at the same time, the variants that are coming out do seem to, in some cases, give advantages to the virus over us. So that's why I'll just keep saying this is an ongoing battle, and we need to work together to make sure that humanity can beat the virus and that societies and economies can continue to prosper. Otherwise, we will get a widening gap between rich and less rich, and that really disturbs me.
David, thanks so much. David Nabarro there, the WHO Special Envoy on COVID-19, and Sam Fazeli from Bloomberg Intelligence. Now, coming up, Mr. Scholz takes a resounding lead in the polls. We'll get the latest on the German election from Berlin. That's coming up shortly, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Leanne.
Hi, Francine. Shares in French drug maker Valneva has slumped as much as 45% after the UK government cancelled a supply contract for Covid-19 vaccines. The company said it contests allegations by the UK government that it is in breach of the obligations under the agreement. The UK agreed last year to buy 100 million vaccine doses from the company. Risks to copper supply have diminished after wage deals at two Chilean mines. Plant workers at the Codelco mine agreed to end a strike, while union members at a BHP operation accepted a new wage proposal. The world's top copper producers coming to the end of an intense period of contract renewals, with workers using high prices and profits as leverage in those wage talks there. And that's your Bloomberg Business Flash. Francine.
Leanne, we have to talk about the tennis. We need to talk about the tennis. I mean, she's an absolute superstar, Emma Raducanu, so we will get back to it shortly. You watched, right?
Oh my gosh, I watched it, Francine. I absolutely loved it. I felt like my whole neighborhood did hear me cheering. What an amazing young woman. Of course, British from Bromley in Kent. Francine, I hope you were celebrating too.
I was celebrating, but it's the press conferences. When I listen to her press conference, that really get me. I mean, she has charisma to burn, and like she's a superstar for all the marketing that could go around it. We'll talk a lot more about tennis shortly with Leanne Gerrans. Now, 2 weeks before Germany's general election, and frontrunner Olaf Scholz of the Social Democrats managed to defend his position as the most likely successor to Angela Merkel. Bloomberg's Maria Tadeo joins us now from Germany. Maria, so there were some spot polls after the debate yesterday, and clearly Olaf Scholz is staying in pole position.
Yes, and Francine, there was a poll, as you mentioned, conducted right after the debate yesterday. It was the second televised debate, and Olaf Scholz won that debate again. Now, that's not really a surprise, considering that he is polling so well as an individual candidate. That's also reflecting the SPD's lead in the election, now really cementing that lead over the CDU. But what was striking to me in that debate was two things. He is now the man to beat. It is very clear that this election is being presented as one that is for Olaf Scholz to lose. And Armin Laschet, who was the candidate that was almost an automatic pilot to replace Angela Merkel, was very much in the defensive. He did seem like he was almost the opposition leader, who was very much on the attack when it comes to Olaf Scholz. He repeated again this idea that he will lean towards a very far to the left coalition, and then brought up some of the scandals in the finance ministry, from Wirecard to Comex. The problem is, Francine, of course, these are issues that are so complex that it's very difficult to define them in just one punchy line. And the other problem is that for many Germans, when they describe Olaf Scholz, the one word that comes to mind is competence. So there is almost this idea that right now, Olaf Scholz, the only thing he needs to do is not to make mistakes, and he is an automatic to win the election in 2 weeks' time.
So, Maria, if Olaf Scholz becomes chancellor, who does he do a coalition with? What part could the Greens play in this?
Well, the Greens are very much presented now as having a huge say in the next government. They will be the first coalition partner to go. And perhaps the performance yesterday from Annalena Baerbock, who at times had some good moments, but also it did feel like she was the third one left on stage, that this was still very much a match between the two men, Armin Laschet and Olaf Scholz. He could go for the Greens, but he has other four parties that he could turn to. And, again, the big question is, which way is he going to turn? Will he go for the Free Democrats, perhaps a more market-friendly coalition, or actually go for Die Linke? That's the Red Scare. This is the flag and the card that the CDU is still clinging on to, that this will be a very radical coalition that the middle average German does not approve of.
Maria, thanks so much for all of the insight. Maria Tadeo there with the very latest from Berlin. Now, the election in Europe's largest economy is fast approaching, because that key date is the 26th of September. And we'll speak to key figures from the German business world about what's at stake, including the leaders of Europe's biggest software company and Germany's largest bank. Don't miss Germany Decides, the chief executive briefing. That's on Wednesday on this program at 9 a.m. London time. Now, coming up, commodities bouncing back despite China's pressure to push prices lower. We assess the outlook for metals and oil with our Eddie van der Walt from our Markets Live team. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's take a look at the markets. Eddie van der Walt from the Bloomberg Markets Live team joins us. Eddie, Monday morning, there are signs that traders are once again buying the dip in the S&P 500 after 5 days of drawdown. So what exactly is happening?
Did we ever doubt it? Did we ever doubt that they're not going to buy this dip?
Briefly.
Look, we had five consecutive down days for the S&P 500, which was the longest run since October of since if we had one more day, it would have been the longest run since since February of last year. I almost forgot my dates there, but of almost the longest run since February of last year. But now that looks like it's gone. And I think, I think that this rally has just been so linear. And there's been a little bit of tapering worry, but I think that's starting to fade into the background. It's probably a good thing that we had this taper, very mini taper tantrum, stocks drawing down just 1.7%, because that shows that, traders are getting ready and are coming to terms with this idea of the Fed taking some of the stimulus away.
Eddie, commodities bouncing back despite China's pressure to push prices lower. So what's the picture across metals and oils?
Yeah, so this is the big one for me, because I think, I'm a bit of a commodities geek anyway, but, China has tried its best to put pressure on commodity prices. But we're seeing in aluminium, with a trip above 3,000, and we're seeing with Brent that it is not that easy for the buyer to push down prices, because if China starts selling a lot of its state stocks, then at some point it'll have to replenish those stocks. So all it's doing is pushing that demand forward into the future. But I think there was also a little bit of a misinterpretation of China's plans. I think China's hopes were to remove some of the volatility and remove some of the near-term premiums that we've seen in commodities. So I think China is waving the white flag a little bit here, but also traders overinterpreted what they were planning on doing.
Eddie, I need to ask about stablecoins. I know you're like the great crypto watcher, but now they're also cracking down potentially on stablecoins.
That is a big risk for the crypto market, because the crypto market has really been, so a lot of the rally in Bitcoin has been built on a supply of new stable coins. And if we're starting to see that being pulled away, I think that's a risk, a very short-term risk for cryptocurrencies.
Eddie, thank you so much. As always, Eddie van der Walt there from our Bloomberg Markets Live team. Well, Bloomberg Surveillance Early Edition continues in the next hour. This is Bloomberg.
A year ago, we would not have believed that markets could have come this far. Really sort of almost impossible. And now the feeling is that it's impossible that markets could actually correct.
Of course, we're going to decelerate. We can't grow at the pace we were in the first half. But now, as that deceleration becomes more entrenched, I think, there's going to be some second thoughts around, are we double dipping?
September, though, seasonally, that tends to be a poor month of equity returns for the markets. We're not surprised to see strategists downgrading their views on equities from here.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, September 13th. Our top stories today. Talking tax hikes on Capitol Hill, House Democrats will propose raising the corporate tax rate, but not by as much as President Biden wants. Chinese regulators aren't finished reshaping the tech industry. Beijing reportedly now wants to break up Ant Group's Alipay business. And countdown to the German election. The campaign's in the final 2 weeks, and frontrunner Olaf Scholz is defending his record as finance minister. Good morning, everybody. I'm Anna Edwards in for Francine Lacqua this morning with Matt Miller in Berlin and Kailey Leinz in New York. Kailey, a very good morning to you from London. We've got European stocks on the rise, US futures on the rise, but the dollar also on the rise. Makes you just question for a moment how much we're really believing in this buy the dip we're seeing.
Yeah, absolutely, Anna. Good morning to you. The dollar is actually stronger against every single Asian currency, so that tells you something right now about the broad-based strength we are seeing in the greenback today. As for the picture in Asian equities, it was broadly lower overnight. The one exception was Japan, with the Nikkei up about 0.2%, but stocks were lower in Taiwan, in China, and really underperformed in Hong Kong, the Hang Seng down about 1.5%. And it was tech stocks really leading those losses. The HS Tech Index down more than 2% as once again regulatory fears rear their head in Beijing. China now reportedly looking to separate out the loan business of Alipay, break up the company, and as a result, that really put Chinese tech shares under pressure. Now, of course, another group to watch in the Asian session in terms of equities was Chinese material stocks, because we got a big boost in aluminum prices, and that made a big boost in Aluminum Corp of China, which is the country's largest smelter. Shares up about 8% as we saw aluminum futures in Shanghai up 3.3%. The market obviously anticipating some major supply disruptions. And then in foreign exchange, as I mentioned, all Asian currencies weaker against the dollar today. One of your biggest underperformers is the South Korean won. The dollar stronger against the won by about 0.6%. That likely has a lot to do with geopolitical risk after those missile tests from North Korea over the weekend. As for the picture here in the U.S., it is looking much more positive after 5 consecutive days of losses on the S&P 500, the longest losing streak since February. We do look like maybe we will snap that today, with futures up about 0.4% with about 4.5 hours to go until the opening bell. Even still, you are seeing a slight bit into the bond market. We're down a basis point on the U.S. 10-year Treasury yield. It sits at just shy of 1.33%. It is a stronger dollar story today, as Anna and I have been mentioning. And then I just wanted to point out that that is not weighing on crude. WTI futures up 1%, gaining for a second day. Of course, the Gulf Coast really still reeling from Hurricane Ida. It still has about half of its production shut, and another tropical storm is on its way. So we have to keep an eye on that, Matt.
Yeah, absolutely. And I mean, I think the commodities, Kailey, is really interesting today, because you do see the oils and gas rising as you see most metals, aluminum the exception on my GLCO screen right now, most metals are down. In terms of stocks, though, it really is a buy-the-dip story. It really looks like a buy-the-dip story this morning. You can see that Europe is green across the board. I think it's also really interesting because with U.S. futures up, typically we see U.S. futures down a week open and then a lot of buying in the afternoon. So this could be a reverse of what we normally see. Take a look at the numbers here. The Stoxx 600, the broader European benchmark that also includes the UK, is up right now about 0.4%, and most equity indexes are just going up and to the right. The CAC 40, I should point out, has taken a little bit of a dip in recent minutes. We do see German bunds trading at 33 basis points to the negative this morning, so still holding in a range. And even though you have a stronger dollar, Anna, against the euro and against the pound, they are also still holding in the range that we see: 117, 118 for the euro, 138, 139 for the pound.
Yep, not much movement there. Getting some comments from some ECB officials as we speak. We'll watch the euro with that in mind. Matt, let's take a look at some of the events that we're watching out for on our day ahead, and in fact the week ahead. Norway holding a general election that takes place today. Polls indicate the Labour Party's Jonas Gahr Store is likely to become the new leader. On Tuesday, that is tomorrow here in London time, US CPI is expected to show that prices continue to rise at a solid pace in August. Just how transitory is that inflation story? Apple is planning its biggest product launch of the year. That's also on Tuesday. The company is set to unveil its latest line of iPhones and other products. Really interesting to hear from Apple in the wake of that ruling on Friday. And we get some economic data from China. That's coming on Wednesday. This includes retail sales, property prices, and industrial production. Then on Friday, Russia holds parliamentary elections. Vladimir Putin's ruling party is expected to cement its control. Sticking with politics, over to Washington, though. House Democrats are set to propose raising the top corporate tax rate to 26.5%. That's less than the level that President Biden was asking for to help pay for his $3.5 trillion economic agenda. Joe Matthew, Bloomberg Washington correspondent, joins us now from D.C. Good morning to you, Joe. So give us a sense of how far away these latest proposals from the Ways and Means Committee are. How far away are they from what President Biden had initially asked for?
Yeah, we're looking at a lot of numbers this morning. President Biden wanted 28%, to be clear, when it came to the corporate tax rate. He also wanted a higher, at least in the initial proposal, capital gains tax rate. That would come in at 25%. Overall here, and we're kind of picking through the numbers this morning, we got a draft of this proposal that will be released formally later today. Bloomberg News has been reporting on it for the last 24 hours or so. The overall number comes in just shy of $3 trillion, remembering that this whole package was supposed to be $3.5 trillion. The way that lawmakers are getting to this, they say that the economic growth created by all of this, by the infrastructure spending, by the new tax structure, will in fact create enough revenue for the federal government that will hit that $3.5 trillion mark. So there's a little bit of different math here than we saw the end of last week, but this is coming together very quickly, and lawmakers are going to have only 8 days when they get back in the House, 1 week from today, to try to make all of this work by the end of the month.
Yeah, well, Joe, let's talk about that timeline, because Senator Joe Manchin casting doubt on that September 27th deadline for the economic agenda getting pushed through Congress. Just take a listen to what he said on CNN yesterday.
He will not have my vote on 3.5, and Chuck knows that, and we've talked about this. There's no way we can get this done by the 27th if we do our job. There's so much differences that we have here, and there's so much apart from us where we are as far as I'm giving you different things. I've been talking, I'm working with people, I'm willing to talk to people. It makes no sense at all.
So clearly digging in his heels, Joe, although he's already said something along similar lines in an op-ed several weeks ago. Where do the progressives stand now after hearing this from Joe Manchin?
Well, they're standing right where they were a week ago when Joe Manchin was telling a very similar story. As you pointed out, that op-ed, he was calling for a pause in these negotiations. Let's keep in mind, though, that this comes in below $3 trillion, the tax revenue that we're talking about. So I'm very curious to hear how Senator Manchin reacts to this. His biggest problem with this bill so far was not only the overall price tag, but the potential for deficit spending. If progressive lawmakers, if even those in the Ways and Means Committee like Democrat Richie Neal, who's considered a pretty mainstream moderate Republican, can convince Joe Manchin that this is paid for, we might start hearing a different tune from him. Let's remember, the negotiations will just really be getting started when lawmakers come back later on this month. And Joe Manchin stands to gain quite a bit for his home state of West Virginia, and it is highly unlikely that he's going to walk away from all of that.
Joe, thank you very much. Thanks for the update from Washington, Bloomberg's Joe Matthew. You can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now, over to China. China is seeking to break up Ant Group's Alipay and create a separate app for its loan business. That is according to reports from the Financial Times. Let's dig into this. It's certainly a story that's moving share prices over in China. Bloomberg's Tom McKenzie joins me on set here in London. Good morning to you, Tom. How significant, then, paint a picture of how significant Alipay is for Ant Group, but what's the sort of size and scope of this part of the business?
Well, so there's the significance for Alipay, and then there's the significance and the broader read-through for the tech space, because, of course, many of the tech giants in China deal with payments. So that's the read-through. But I'll start with what's happening with Alipay. Again, according to these Financial Times reports, Alipay, part of Ant Financial, for the size and scope, still one of the largest financial technology companies on the planet, OK? So what we're hearing from this report is they're going to have to break off the lending part of the business that was so profitable for them. They were doing credit scoring. There is no traditional credit scoring. You don't have Experian in China. So people are reliant on these kind of services. They're going to break those off, put them into a separate app. Crucially as well, data that underpins those lending decisions will go into a joint venture. The shareholders, some of them, are SOEs, state-owned enterprises. So that's where the government comes in terms of ensuring that they have control over that data. So that's the breakdown in terms of what it means for Alipay and Ant Financial.
You know, the constant question here, Tom, is what's the next shoe to drop, right? Investors are watching and they've seen education, ride sharing, video games, fintech all fall. What's next? What else is there?
Well, it's interesting. We spoke to one of the lead VCs, venture capital investors, last week about this from Qiming. And they said, Dwayne Kwang said, look, we have the broad outlines now of where the regulatory push is going. It's about the details, it's about implementation, and it's about the granularity of how these regulations are put into place. So you're getting that now with this story from the FT around Ant Financial and Alipay. We're getting that detail starting to be fleshed out. Some would argue that in terms of the investor sentiment, that's positive because you're getting a bit more clarity. But you're absolutely right to point out, Matt, that there's a long way to go given the numbers of sectors that have been embroiled in this regulatory squeeze. And again, the read across from Ant Financial and Alipay, there's an impact on Tencent. That's why their shares are lower. Meituan as well, because they all deal in payments. That is data security in terms of financial risk, but also national security as well. But you're right, there's a lot more that needs to fall into place before we have any real clarity.
All right, T-Mac, thanks very much for joining us. Our go-to guy on China, Bloomberg's Tom McKenzie there. Let's get to German politics right now because the voters here hitting the polls in just 2 weeks' time, and frontrunner Olaf Scholz of the SPD is consolidating his lead. Viewers believe Scholz won the second of 3 televised debates last night. And for more, let's go to Maria Tadeo. She is on the scene here in Berlin. Where are you, Maria?
Where do you think? Take a look. In the most beautiful...
I'm standing right in front of the Reichstag there.
Indeed. Indeed. I have the best background in the whole of Bloomberg TV today, thanks to Aggie Cantrell, our producer. But Matt, yes, yesterday we had a big debate. It's the second televised debate in the German election. You're very right. There was a poll that was conducted right after that debate. Olaf Scholz won that. Again, it's not a surprise. He is polling very well, especially as an individual candidate. And we did see Armin Laschet trying to get on the attack, being much more aggressive than we've seen before, kind of saying, you know, you have your financial records and your record as a finance minister. I would be very worried if you were my finance minister. And again, flagging this red scare, this idea of a red-green coalition that Olaf Scholz would opt for and take the country to a much more left-leaning position. Having said that, when you take all of this into account, it does seem now, and I wonder, Matt, if you agree with me, that this is very much an election that is for Olaf Scholz to lose now. If he doesn't make any mistakes from now until the vote, he will very likely win that vote.
Okay, so it's his to lose then, in a sense, then, Maria. Do you get any sense that any of the attack lines the CDU is putting forward are going to change the polling? Because the polling is now reliably putting Olaf Scholz ahead. Are any of the lines that they're giving us around fears of the Red Coalition, as they put it, or criticising Olaf Scholz's record as finance minister, given that they've been working with him as finance minister, is interesting in itself. Are any of those landing with the electorate? Are they making a difference?
Well, Anna, that's a very good point, because the CDU conveniently seems to be forgetting that they have been in a big coalition with the SPD and that Olaf Scholz served as finance minister under Angela Merkel's watch. So ultimately, it's the chancellor that's responsible for every action that the government takes. Overall, when you look at polls, no, it doesn't seem to be sticking. But when you look at Armin Laschet and his place within the CDU and the CSU, it does seem that they like this aggressive line that he's taking. On Saturday, he went to a party event in Bavaria. He got a standing ovation from the CSU, the sister party. He got a standing ovation for Markus Söder. And there had been a lot of questions in this election as to whether or not he could manage to keep the party united and keep control of it. And internally, it does seem that this is binding everyone together for the time being, but a lot could unravel if the election result is bad for the CDU.
All right, Bloomberg's Maria Tadeo joining us from a beautiful Berlin. Thank you so much. Back to the markets now with a look on some stocks moving in pre-market trading here in the U.S. I was talking about that rally we are seeing in aluminum prices as that is translating through to aluminum producer Alcoa in pre-market trading. Those shares are up 2.3% before the bell. Another mover to the upside is Viacom CBS. This is on a report that they're going to split the management of its TV and film Paramount Pictures production. So maybe some optimism on that reorganization reported by Dow Jones. The shares are up a little less than 1 percentage point in early hours. But one mover to the downside is Virgin Galactic. Of course, the ticker is SPACE. It is not going to have its test flight for Unity 23 until mid-October because of a manufacturing defect. The company is looking into that. It's unrelated to that FAA grounding with the Unity 22 flight in question, but those shares still down about 3.2% before the bell, Anna.
Okay, few pre-market movers to focus on then. Coming up on this program, we will talk markets with Tim Graf, head of EMEA Macro Strategy at State Street. He'll be with us shortly. This is Bloomberg. Welcome back. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, stepping in today for Francine Lacqua here in London with Matt Miller in Berlin and Kailey Leinz over in New York. Now, Goldman is doubling down on commodities. Ritika Gupta has the details. Ritika.
Yeah, and industrial metals broadly within 5% of an all-time high, according to a Bloomberg index. But let's focus on aluminum, because that is rising, surging. Those prices briefly hitting $3,000 a ton in London. So a big surge there for the first time in 13 years. And you can really see this incredible rally from this chart here. Back in May of 2020, prices pretty much doubling since then. Originally, it was that demand for infrastructure spending, stimulus. But now Goldman Sachs saying a lot of it is down to supply, and particularly policy risks in China, but also increasingly in Europe. A lot of this on environmental concerns. So flip up the board. Let's take a look at some of the stocks moving off the back of this, pretty much getting a big bid here. If you look, AMG Advance up some 7%, and Granger's as well up some 1.3% as well, Anna.
Ritika, thanks very much. Joining us now from the Markets Live team, Eddie van der Veld. Eddie, good to see you this morning. I know commodities are very much your bag, so let's start with aluminium, as we say here in London. It's on the rise once again, driven by the same old stories, is it? It's about China not wanting to produce in its backyard, but not wanting to invest perhaps in its backyard, concern around the environment, and what's going on in Guinea.
Yeah, absolutely. And, we had aluminium pushing above $3,000 a ton on the LME this morning. What this story really just tells us is that supply chains across the board for all of the commodities are extremely stretched at the moment. So when we see worries like we do with the bauxite situation in Guinea, or with China, talking about higher energy prices, what we are seeing is that supply chains can very quickly push commodity prices over the edge, and we see these spikes higher. Now, those spikes at some point, we may see an unwinding, but I'm very much of the Goldman school here, where I think we are in a multi-year rally, that this could last for a while. That there may be tactical opportunities to short this, but go on.
Eddie, when you step back and look at the economy and how it's being affected by the Delta variant and then all the other Greek letters up through mu, is that a problem at all for the commodities universe that you cover?
Thank you very much for that. I never knew what came last. But listen, it is a worry. It is a worry. And there are other worries too. It's not just about the Delta variant. It's not just about slowing economies. It's about the fact that we in the West are buying different goods and we're moving back to services. But the commodity story is a robust one if you pick the right commodities, right? Something like copper will do well on the back of a pivot towards electrification. That we can't make that shift to the green economy of the future without copper. And we don't produce enough copper, and we've already explored all of the copper that we're likely to easily find. Therefore, the only answer here is higher prices for copper to justify the further exploration and so on. And that will be true for other metals as well. It's a different story for oil and some of the energy commodities. Some of the energy commodities are still doing fantastically well, just purely on supply crunches and on OPEC controlling prices. And that's not necessarily going to continue into the distant future.
Right, yeah, we talk a lot about government spending and infrastructure. We don't talk much about CapEx. That's a big theme that seems to be building. Been reading quite a lot about that on the Bloomberg recently. Eddie, thanks so much for joining us. Eddie van der Veld of the Bloomberg Markets Live team. Coming up a little bit later on Bloomberg TV, we'll be hearing from Carl Weinberg, Chief Economist at High Frequency Economics. No doubt tomorrow's US CPI, part of that conversation. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards, stepping in for Francine Lacqua today in London, with Matt Miller in Berlin and Kailey Leinz in New York. And Matt, it is a funny session we have here in European equity markets. Second best performing sector is utilities, so maybe not such energy to the upside, if you like. The dollar also going higher. It's a strange day where you see stocks and the dollar on the rise.
Well, I think you make a great point in that we see a lot of assets that are typically used to hedge on the rise today. And then you see defensive sectors leading the charge in terms of the gains that we see, at least here in Europe so far. So it looks like kind of a defensive rally. On the other hand, we do typically see post 9/11 rallies. If you look back through history. So maybe that's part of what we're seeing today. I just think it's interesting that it's kind of the opposite of the normal pattern I've witnessed over the past few weeks, which is selling off the futures, a soft open, and then buying a dip in the afternoon of U.S. stocks. So maybe this turnaround has something to do with 9/11, with the anniversary that saw over the weekend, or maybe it's just that the pattern I've noticed isn't going to happen every single day for the rest of my life.
Maybe that's it. Maybe there's something to that. Kailey, let's come to you. What are you seeing in the markets?
Well, as you said, it is a positive day in Europe. You do have energy and utilities on the leaderboard for the Stock 600, which at the moment is higher by about 4.5% in European trading. Now, U.S. futures also in positive territory across the board. Interesting to your point, Matt, it does seem that the more risk-on indexes are actually the ones leading the gains, and that the Russell 2000 is outperforming in pre-market trading, while the S&P 500 futures are up by about 0.5% at this point in time. Just a slight bit into the bond market, the U.S. 10-year Treasury yield down about a basis point. We're sitting just shy of 133. And then, of course, my attention really is on the commodities complex, specifically aluminum, which did rally up to $3,000 a ton for the first time in 13 years earlier on the London Metal Exchange. Right now, we are just off those levels. 29.49 is where we are, but still futures up about 0.9% amid expectations of supply disruptions. And that move in aluminum is following through to some materials-related equities in pre-market trading here in the U.S. Alcoa is up 2.6%, Freeport-McMoRan by about 1.3%. And then, of course, we do still have ongoing fears around the Delta variant. The way to combat that is more vaccinations, and you have vaccine makers moving to the upside. Novavax is up 3.6%, and Moderna up by about 0.8%. Matt?
All right, very interesting. So much to talk about when it comes to vaccines, but also stocks. I've got a chart here that shows U.S. equities have outperformed from the pandemic bottom. When you look at them versus Japanese equities, or if you look at them versus European equities, etc., the U.S. It has really done better. The S&P 500, the dark blue line, that is difficult to make out. I should play with the colors there. Anyway, Tim Graf, head of EMEA Macro Strategy at State Street, joins us. And the reason, Tim, that I pull up this chart is because my good friend Tom McKenzie on Bloomberg Radio this morning was telling me you love European stocks. And I know it's a popular play right now. He said that was a direct quote. Do European stocks have a lot more room to run than U.S. stocks?
No, I'd still say we prefer the U.S. And the reason we do is for the reason that I think that outperformance you mentioned is there. You have the high concentration of tech companies, and particularly the capacity for CapEx from a lot of the tech sector in the U.S. that still makes them really the go-to. The return on equity of U.S. stocks also is far more attractive now. The U.S. stock market is not the value market. That's why we like Europe. We like that relative to the global indices as well, because the valuation constraint isn't there. You have that high industrial component within the European equity market that we do love, to quote myself. And then there's also the beat-up financial sector. For the last 10 years, European financials have been the laggard. But we have an ECB that, even though they won't admit it, they really are likely moving towards tapering, and maybe not aggressively higher rates, but better conditions for financials potentially in Europe. So yes, the love is there.
Tim, I was talking to Lisa Shallett from Morgan Stanley the other day, also on my radio program, which listeners can catch every day from 10 to noon New York time. I was talking to Lisa Shallett, and she said she expects a 10 to 15% correction. And we've heard similar warnings from most recently Deutsche Bank, but also from Goldman Sachs that we're in for a correction here. Do you agree?
Maybe. I suspect it's a correction that will be bought, just like the U.S. equity market has been bought on dips for the last couple of years, pretty consistently, simply because the return profile of U.S. equities, the earnings potential, the outlook for U.S. corporates, the cash piles that they're sitting on for potential investment, I think all still weigh in the U.S.'s favor. I mean, there's no question that valuation is a concern right now, and it has been a monotonic rise in U.S. stocks for 12 months. But I think it's for very good reason. You're in a growth-demanded environment where the U.S. equity market in particular gives you that growth. And so I think, maybe you get a correction, but it's one that I wouldn't necessarily try and time to get out now to get back in, 5% lower. I just don't think that's worth it.
Well, but Tim, let's talk about risks to U.S. equities specifically. We have Congress now proposing a 26.5% corporate tax rate. Yes, that is lower than what President Biden wanted, but still, it's higher than what currently exists. Do you think that kind of policy risk is properly priced in?
Probably not, but that still, over the course of history, that's still a very low U.S. corporate tax rate. I mean, put it another way, multiples on U.S. stocks over the last 40, 50 years of history have been at this level or more extended when corporate tax rates were higher. So I don't think it's not a positive. But I think a modestly higher corporate tax rate doesn't necessarily change the valuation environment for U.S. corporates. Nor does it really change the earnings and investment outlook for them, particularly the big index weights that are driving returns in U.S. stocks.
Okay, then let's focus on that earnings outlook then. We obviously have persistently high producer price inflation. We saw that with the read we got here in the U.S. on Friday. That means higher input costs for companies. What gives you the confidence that they will be able to continue to pass those on and retain their margins?
We're seeing it through some of our inflation gauges, where retailers, when it comes to the higher prices they have for inputs, they're seemingly happy to pass those on to the consumer. So, therefore, the margin component of that part of the U.S. equity market isn't being as directly impacted. The other factor is the U.S. is ultimately a service economy at its core, and so some of the input, the materials costs are not going to be insignificant, but they're perhaps less significant than other economies or other markets. And so it's not to downplay the risk, but A, we see the pricing power that retailers currently have given strong demand, and B, the composition of those companies that would drive the U.S. equity market higher are a little less sensitive perhaps than other markets.
Tim, away from the services sector, you mentioned the cash piles that many, in particular U.S. businesses, but other global businesses are sitting on right now. How much is capital expenditure as a theme going to be something that you can invest around?
For us, it's a major factor, I think, for the next year, simply because, look, we've had great results. We've had a far more robust recovery than was feared. And all of that is backward looking. And so you have to think about what's to come. And that is where the investment outlook comes into play, and where cash piles, I think, are very important, and that particularly that investment outlook becomes all the more important. And that's the forward-looking gain that we see, is just the robustness of corporate balance sheets and how much it affords them for future investment.
So those are the things you like, Tim. Thinking about some of the things that are not currently in favour over at State Street, maybe Chinese equities. How much of this is about the Chinese domestic economy and the zero tolerance for COVID policy that we've seen enacted up to this point, at least?
Sure. It's really entirely domestic, because the external sector in China appears, when you look at their own trade data last week, but also the global ISM new export orders, things like that. It seems like the global element, the global exposure that China has, that is a support. But the domestic economy, because of the zero COVID policy you mentioned, the willingness to lock down economic activity far more aggressively, that's the worry. What we're not seeing, I mentioned the developed market picture for, say, U.S. inflation and robust demand-driven inflation. We're seeing the opposite in China. It really is the exception right now when it comes to the domestic sector. And that's a real concern, but it's one, I think, in past market environments might have given you a little bit more concern about the global economy. But really, the global economy, the policy and dynamic in particular, has changed so much over the last 2 or 3 years, particularly because of COVID, that those global factors, I think, can support where the domestic economy in China is, for us, probably the biggest worry right now.
All right, Tim, thanks very much. Tim Graf there, head of EMEA Macro Strategy at State Street, talking to us about his take on the markets right now. Coming up, brace yourself. The pandemic's next 6 months will pit vaccines against variants. It's our latest big take. This is Bloomberg.
Given that we have a new strategy and that we continue to live with the uncertainties of the pandemic, giving the public the information it needs to better understand how policymakers are likely to react, not only to anticipated economic and financial developments, but also to unanticipated developments, seems like a very worthwhile endeavor.
Cleveland Fed President Loretta Mester speaking at a virtual event on Friday hosted by the Bank of Finland and the Center for Economic Policy Research. Joining us now is Tom Keene, co-anchor of Bloomberg Surveillance. Tom, happy Met Gala Monday. Before you grace Anna Wintour with her presence, with your presence later on today, we have to look at this equity market. In the day of trading, we could see 5 days of losses on the S&P 500. Maybe we snap it today, but what do you see when you look at this equity market?
Some of the gloom that's out there, and it's tangible. You see it in every memo written. You see it on Wall Street as well. And maybe it's about the pandemic. Of course, the Met Gala, this is on Fifth Avenue, folks, in New York. It's a real benchmark for May. It's been delayed into the autumn. And, you know, it's great to see Naomi and Billy and Amanda Gordon will be there and the rest. You know, it's going to be wonderful, Kailey. But it's a symbol of what we're trying to do, which is get this economy back, and that's the uncertainty in the market. The chart real quickly here, Standard & Poor's 500. This is not the most original chart, but boy, does it speak a story. And this is just 2 standard deviations out of a 30-year trend. And we're a little bit elevated. We're above 1 standard deviation going back 30 years, and we've pulled back. This is the equal-weighted Standard & Poor's 500, which takes that tech noise away.
Tom, how has New York bounced back? I was there at the beginning of the summer, and I still saw so many empty storefronts and a lot more crime and grime on the streets than I have been used to. How is New York coming back as we get into the fall?
I think around the nation, city to city, it's a different story. I'm seeing a little bit of a storefront percolation, Matt, and certainly we get through the remembrances of September 11th and move on into the fall. To me, the linchpin, Matt, is the schools. That's still an open question.
Yeah, absolutely. Here as well, Tom. Thanks very much. Tom Keene, co-anchor of Bloomberg Surveillance. That program up shortly. Thank you very much for joining us. Now, a look at what else we are watching. Kailey, what is on your radar?
Well, just like time, I'm watching schools. It is the first day of school in New York City today. Of course, it is the largest public school district in the country. 1 million students are going back to school in person. Mayor Bill de Blasio has eliminated the virtual option, so all kids will be back learning in the classroom, whether or not they are vaccinated, because there is no mandate in place unless you play sports or do something like cheerleading or band. Now, de Blasio says about 2/3 of all children 12 to 17 are vaccinated in the school district, but of course there's still that under 12 question with no vaccine eligibility for them. So we'll be interested to see, Matt, if we can indeed stay in person with public schools here in the U.S., or Bill de Blasio is going to have to rethink that virtual option because of the Delta variant.
By the way, the beauty of American schools is that you can do school sports, have cheerleading, have band. This is something that I don't think British schools embrace, and I know German schools don't embrace as well. And speaking of sports, you know, I'm watching the vaccination rates in various leagues. We saw yesterday Novak Djokovic lose the U.S. Open to Daniil Medvedev. Neither one of those 2 finalists were vaccinated. And I think it's really fascinating that you see in the NFL, in the NBA, even in MLB, and even the PGA has an 85% vaccination rate. But most of the leagues in America are 85, 90%, 95%. Meanwhile, in tennis, for some reason, only 50% of the players are vaccinated. It's only half of the tennis tour is vaccinated. And I just think it's fascinating that you see the greatest players in the world refusing to get a vaccine.
Yeah, it's an interesting one to watch. And just in case everybody thinks that European schooling is really terrible, not so much cheerleading. Plenty of tennis, though, and just a little bit of cricket where I am. I'm watching cryptos, Matt, because I thought it was a really interesting angle or part of the story we covered earlier around the US tax plan. They're considering ways that they might be able to tax crypto. And this really, I was really interested in this because I thought for an asset that's been either wants to, or maybe in some cases doesn't want to find sort of legitimacy in a mainstream status, could taxation be the way for crypto to become more mainstream as the government casts around for assets to tax? That could be an interesting one that we are watching.
As if we're not taxed enough already, you know? Can they tax us more? How many times can they tax us?
Oh,
Yes.
many. You just watch. More Bloomberg Surveillance is ahead. We will hear from Amy Wu-Silverman of RBC Capital Markets. We'll leave you with the European equity markets on the front foot, up 0.4% on the STOXX 600. US futures pointing it to the upside. It's a packed calendar of guests coming up on Bloomberg Surveillance. This is Bloomberg.